Good afternoon and welcome to CannaList Conversations. We're here today with Nick Rodgers. He is a partner at the tax practice group of Greenspoon Marder in Denver. I'm sorry, did that to you?
All right.
The partner name.
Greenspoon Marder.
Thank you very much.
You bet.
So I recently read an article that you produced about taxation and in the industry. So can you tell us a little bit about that article?
Yeah, so that was an article that was an op-ed piece. It's the first op-ed piece I've ever had to write or chosen to write. And I was I was involved in helping a company here understand some IRS materials that they had received. And we did a series of articles on that. The IRS program to audit the cannabis industry, and they asked me to do an op-ed as part of that series. And to tell you the truth, I started writing about all the social issues and all the problems we have here in the United States. I'm here in Denver, and it was right about the time of the shooting in Boulder. My office actually looks out on the Boulder Flatirons, and I was pretty upset about that. I started kind of writing about that, and they said, Nick, you're a tax attorney. We think you should stick to the topic. So, but there's a lot of injustice in the cannabis industry as well, and so I focused on that aspect of the taxation of the cannabis industry. And there's a code section called Section 280E. That code section denies deductions for what are called ordinary and necessary business expenses. So if you were here in Colorado, it's 420 today, by the way, which is our celebration day for marijuana. And you went in and you wanted to get some party favors to celebrate with, and you walked into a dispensary. Basically, everything you see in that dispensary, the bud tender salary, the insurance, the rent for the dispensary, the cash register, the point of sale system, all that stuff is all non-deductible. So the company that's there selling that marijuana cannot deduct any of those expenses at all. And my article centered on that dynamic and the fact that the code section, which basically says no deductions for the cannabis industry or for any company trafficking in a Schedule 1 or Schedule 2 controlled substance.
So can I interrupt for a second?
Yeah.
Maybe to sort of put this all in context, tell us a little bit about your background. I know you used to work somewhere, and it's probably pretty, poignant to what we're discussing.
Right. Yeah, so I was an IRS trial attorney. That was the first job I got right out of law school. Okay. I started in the LA area. I got involved at that point was when the internet was sort of pretty new. It was sort of 98 or late 90s. The internet was starting to grow up. And if you went onto the internet at that time and you started Googling around, one thing you found a lot of were tax shelters. And so I got involved in trying to get out in front of those tax shelter promoters and stop them from promoting false claims regarding tax shelters. That was a little bit of my claim to fame in the IRS, and part of my article was about the fact that the IRS is using the same tactics that we use to go after tax cheats, including people that were funneling money offshore and creating structures to cheat on their taxes. A lot of the tools that we developed in that war, we called it a war, are now being used against the cannabis industry. In order to make sure that they suffer the full extent of Section 280E.
And can you think of any other industry where this is being applied like that?
No, not a one. As a matter of fact, even in one of the things that is not in the article is even in the tax shelter world, the IRS has provided what are called voluntary disclosure programs for people who just blatantly cheat on their taxes, feel like they're going to get caught, but before they do get caught, they can come forward and voluntarily disclose, and the IRS will give them a break. Nothing like that exists for the cannabis industry. At every single turn of the road, the IRS is going to impose 280E to the fullest extent possible, even if they have to bend the law to do it, it would seem at this point. And that is really, Patrick, part of the genesis of 280E. 280E was created to punish people who sold marijuana and other drugs. And when marijuana was legalized first in California, it was the primary tool that was identified to shut down the industry before it got going.
And, so what is the, the ramification of this on, mom and pop type dispensaries, who are trying to survive, and now they're burdened with this type, this along with a whole bunch of other taxes, luxury taxes, things like that. This sort of speaks to why it's so difficult to,
Yeah.
launch these types of businesses.
For sure. I would say the cannabis industry pays 70% effective tax rate, maybe higher. Some of them, I have clients that pay over 100% effective tax rate. And Patrick, that seems impossible, but let me give you an example. If I'm a dispensary and I buy a joint from you for $5 and I pay, let's say, Sally $5 to sell it, and she sells it for $12, I've got 20% profit margin there. I just made $2, right? I had to spend $10 to make $2, but guess what? Under 280E, the $5 that I paid to Sally to sell the marijuana is non-deductible. So I would actually pay tax on $7. And so if I'm in a 30% or so tax rate, I could be paying more in tax than the $2 that I made. And that happens more often than not. I have plenty of clients that incur $1 million. That's called phantom tax, right? Phantom income, phantom tax, because you don't really get that money, but you have to pay tax on it. I have plenty of clients that incur $1 million phantom tax liabilities every year that they can't pay.
And this runs completely counter to what we see in the press. I mean, Schumer came out and said, "Oh, we're going to legalize, recreational use." So everything that we see in the press from the politicians would suggest, oh, they're supportive. And yet, when you look at the actual agencies that are regulating this, they're making it next to impossible to function.
And nobody cares about that. You never, there's no way that a standalone fix for the tax system is going to go anywhere. Nobody cares if the marijuana industry has to pay, unfair taxes. The good thing is that with full legalization, 280E goes away, but it has to come with something else. That simple problem is one that probably won't be resolved on its own.
Because with legalization, it'll be reclassified, so then it won't be subject to it.
Correct. It applies to a Schedule 1 or 2 controlled substance. And so long as they don't move it to 2, if they move it to 3 or deschedule it completely, then 280E goes away.
Okay, so that would be one of the potential solutions to this problem.
Yep, for sure. And then the other solution, I think, is it's sort of a partial solution, but the solution that I proposed in my op-ed of allowing the disallowed expenses as basis in the business is also a solution. It sort of means that you cannot get back the expenses that you paid to build your business until you sell it,
Right.
Which isn't a great solution for everybody. But I think it does fit into the way taxes work. Expenses are assigned to assets, such as when you build an asset, when you sell it, you deduct your expenses and you pay tax on what remains. And in our system, we have a code section that says, hey, the expenses that are really for building your business, the day-to-day ordinary and necessary business expenses, our code says, hey, you can take those as a deduction now. You don't have to wait till you sell your business. And that is the code section that is being denied to the cannabis industry. But nobody is talking about, okay, well, then what do we now do with those expenses? And I'll bet there's not a CPA accountant person out there in the world that would say that an expense that's ordinary and necessary can just disappear for financial purposes. It has to go somewhere. It has to go either to a deduction, cost of goods sold, or it has to be capitalized. And just because we don't allow the cannabis industry, one of those things, doesn't mean that the other items aren't available.
But it also speaks to, though, sort of how this will, skew the cannabis market to big players, because they're the only ones who are going to be able to, they can benefit from waiting 10 years to sell the company and then take the gain. The mom and pop operation is relying on cash flow and doesn't have that luxury. So what this does is this continues the, the advancement of large, capital running the industry.
For sure, it does. For sure, it takes capital to just survive in the industry. I mean, when you add on super high tax rates to an industry that is, they're the dog that gets kicked by every official out there. If you're a fire inspector or a city official or a state official or a federal official, you're gonna show up and you're gonna impose your full authority on that cannabis company. And they are chasing fires constantly. And when you add 280E to the mix, it's really hard for a lot of them to profit. As a matter of fact, Patrick, let me say, if I owned a convenience store and I was bringing in the kind of money that a small mom and pop cannabis store brings in, small mom and pop cannabis store brings in somewhere between, I'd say, 3 million and 7 million a year. And they probably keep enough to support the owner's family in a good lifestyle. So they probably take home about $500,000 on that 6 million that they bring in. If you were a convenience store owner, you'd take home half of that, right? And so it is, even though the dollars and the gross revenue, and we all saw those shows with those giant piles of money on the tables, right? That money's all gone at the end of the day.
Yeah, I mean, and the other thing that it speaks to is, this only applies to the retailers, right?
Well, it actually applies to the whole industry, but because of the way that the Internal Revenue Code works, this gets a little technical, but costs of goods sold are the part of the business expenses that are allowed to be deducted each year. And if you were a grower, everything that you spent money on, right up to the final packaging, your 1 pound packages ready to ship, all of that is cost of goods sold. So almost all of your expenses can end up in a deductible category if you're a grower or a producer or a manufacturer. Differently, if you're a store, cost of goods sold stops once the product comes in your door. So you make a wholesale purchase of marijuana for resale. Once you've paid for that product and it is in your door, your cost of goods sold stops. So everything that is basically the dispensary is non-deductible.
So the overhead and right. So that is, the irony is, we'll let you grow it, we'll let you produce it, but you just can't sell it.
It doesn't make any sense. It doesn't make any sense. It doesn't, that you're right. It makes it so the big guys can compete. It also makes it so the black market can compete. And we've had a hard time getting rid of the black market because it's so expensive to sell it on the legal market.
And so, you're from Denver, which is, obviously been leading this for a long time. You guys have, been very successful. We've seen job creation. We've seen, an increase in the tax base, which then has gone back to other social programs. What kind of advice do you have for, the emerging markets, or, like something like New York, where this is first taking off? How do they deal with this from the get-go?
So, generally you have a group that has some funding. They'll have a person that knows something about the marijuana industry, a person who has some money, a person who has some connections, and some financial guys that have some pro formas. Those pro formas almost always have them making billions of dollars in the very first year. So the very first thing I tell them is to put their pro forma away, because what we hope for is to break even. And then I start to educate them about how tough the industry is and how important it is to get started right. What 280E does is it creates phantom income. And the way that our tax system works, and most countries' tax system works, is you have two kinds of entities out there. One kind of entity is a C corporation, and that's a taxable entity. It pays its own tax. It is a tax-paying, body. Differently, you have what are called flow-through entities like partnerships, S corporations, or LLCs, where the tax flows through to the individual. And if you're getting started in the cannabis business and you start out as one of those flow-throughs and you start getting $1 million phantom income tax, well, guess whose that is?
Yeah.
That's your personal tax liability. It shows up on your personal tax return and you're personally liable for it. And if you can't pay it, now there's a lien attached to your home, and the IRS is looking at your other assets to satisfy that phantom income tax. Differently, if you're in a C Corp, that dynamic is not going on. It's the company that's liable for the tax. And because the IRS can't seize the marijuana, there's not a whole lot they can do to that company. Whereas if it was an individual, there's a lot that they can do. And so that just getting started in the right kind of entity it could be life or death for the cannabis industry.
And so do we see these types of restrictions when, you know, things are coming from outside the country? I mean, that's not applicable because
so
it's
if
at
we
the
were to
retail
produce
level, right?
marijuana in another country and then ship it
Yeah,
into the United States,
it doesn't matter because it's at the retail level, right?
it would still apply.
Yeah.
I mean, you can't do that, but technically the purchase of the marijuana. So if I was a retailer buying marijuana from, say, Colombia or something like that, let's go fast forward 10 years when maybe that's possible.
Right.
I would still be able to deduct the cost of the marijuana that I was buying, but I would not be able to deduct the cost of selling it.
And why does this exist?
It was in the 80s in the Reagan administration's war on drugs. There was a individual who was an illegal drug dealer who deducted their cell phone, their scales. They took a home office deduction, and the Congress found out about it, and in the height of the war on drugs, they needed a scapegoat, and so they made a big deal out of that, and they passed Section 280E. In order to take away an individual's ability to deduct the costs of selling a Schedule 1 or Schedule 2 controlled substance. It's, Patrick, we've got magic mushrooms are almost legal here now as well. They're also a Schedule 1 controlled substance. Same rules would apply there.
And yet, things like alcohol aren't subjected to this.
Correct. No, that alcohol, tobacco, other pharmaceuticals, that kind of stuff is not subject to 280E.
Right. It's just the Schedule 1 that's causing this.
Correct.
So, it is the quickest route to a resolution is just the legalization at the federal level?
Well, there's a fight going on to prove that 280E is unconstitutional. And so our tax system, we're talking here about income taxes. Our income tax system comes from the 16th Amendment to our Constitution. The 16th Amendment gives the US Congress the right to tax, quote, income. And income has been defined as gain.
Profit,
and so
right?
in that selling of the joint example, boy, my gain was $2, right? But I paid tax on $7. How can that be constitutional under the 16th Amendment? And so there's a fight going on right now to try to prove that Section 280E is unconstitutional. So far, the courts, you just say marijuana and they rule against you. It almost feels like they don't care what the law is. At some point, though, somebody's going to realize that gain is gain is gain, and there's no way around it. It's very straightforward. It's common understanding, and the solution that I put out there, I think, is what the IRS has got in its back pocket. As soon as it's proven that they cannot disallow the deduction forever, they'll just give it to you as basis. And I'm saying, look, IRS, get that message out now, and it makes the tax system work, and it'll help the industry.
But, this seems so counterintuitive to the need for economic development, right? What we want to see and what we have seen, the industry is creating jobs, right? The industry is creating tax revenues, maybe unfairly, but clearly they can create tax revenues, right?
Mm-hmm.
And then we're making it as difficult as possible to succeed. It would seem that people would want us to succeed. We want to create jobs.
Yeah, interestingly, the IRS doesn't want to take those jobs away either. So if they were looking to collect money from a cannabis company, they wouldn't want to put the company out of business because they wanted to continue employing people. They just want to take all the owner's money. That's what they want to do.
Yeah, but that may be the theory, but the reality, the practicality is they make it so prohibitive that many people can't, operate or, profitably or, support their staff because of the onerous tax.
It makes it really hard to do good things. For example, providing benefits to a bud tender, those are costs you can't deduct. Making charitable contributions for causes that are good for the industry, those are costs you can't deduct. And so it really limits the kind of things that the cannabis industry can do and the ways that it can improve the community. Those are there's a little difference though, Patrick. Those are federal taxes that we're talking about, which goes into the federal coffer. There are state taxes that are very onerous as well. Those state taxes get paid because you lose your license if you don't pay your state taxes. And Patrick, there's a small town to the north of me here. It's over there.
Oh yeah, that one. Yeah, okay.
And a little small town that's in the middle of like a bunch of dry counties, as we call them, and they have legalized marijuana in their town. I have a client there, and that town during the first year of adult sales, they had more tax dollars than they could spend, so they built a new library and a new fire station. The next year, they built a new police station and they paved every road in the town and repaired every sidewalk in the town. The next year, they didn't have anything to spend money on, so they created a program. If you own a piece of real estate in that town and you want to put a new roof on it or paint it or do some landscaping, they'll match you dollar for dollar with cannabis money.
And we've also seen you go into
we have
scholarships.
another town to the south of me that if you graduate from a high school there, you get a cannabis scholarship from the money, the state taxes that are paid. So there's just huge good things that are being done by the industry, but they could do a lot more if 280E wasn't such a big problem.
And why does there continue to be this disconnect? Is it just the IRS is it doesn't move fast? Is it the IRS? Is it the politics? Why is there this disconnect?
Well, first off, nobody really knows about it. It's sort of it's a little bit of the dirty secret of the cannabis industry. Everybody thinks these cannabis owners and operators are just rolling in money, right?
So not anybody who's actually trying to do it though, right?
Yeah, they don't really get that how hard it can be. And there's not a lot of sympathy when you say, hey, look, they're really struggling. It's sort of too bad, so sad. The industry itself has a little bit to blame. There are plenty of people that aren't honoring 280E. And so you've got one person on one side of the street that's trying to pay their taxes and be compliant, and a person right across the street that's not doing that. And so it creates, a sort of a little unlevel competition out there, and it drives the price of cannabis down, where it's in many instances, it's just not high enough to cover their true costs.
Well, and it also continues to prop up the illicit market and the black markets, right?
Because, and that's the other side of it. They can't raise their prices too much because then, they
right, and the black markets, don't have the taxation issues, right? So that you don't know what kind of product you're getting on the black market, but it is cheaper.
It is cheaper. It's probably covered with pesticides, but it is.
If it's just pesticides, you're doing good.
Yeah, I hear you.
You know what I mean? So what advice would you have for anyone that is sort of running into these problems with the IRS?
Don't talk to the IRS. First off, hire a lawyer. They're not your friend. They're not there to help you. They are there to assess the most amount of tax that they can. So if they call you, you tell them you have a lawyer and you get your lawyer on the phone. Patrick, in those training materials that we covered in that series that we were talking about, it was one of the main things they said is call the taxpayer right away before they can hire a lawyer. It may be the only chance that you get information out of them. And, that's very telling that's the IRS's point of view, right? Because they want to ask the questions that are going to hurt you financially. And so having somebody there to handle those questions, you're not going to lie to the IRS, but having somebody there that can navigate those waters for you and keep you out of the fray is hugely important. I'll tell you a funny story I like to tell is one of the questions the IRS likes to ask you when you get audited is, hey, taxpayer, hey, Patrick, do you have a cash hoard? I guess, There's nobody out there in the world that would say yes to that question. I mean, the IRS asks you if you have a cash hoard. Hell no, no cash hoards here, people, right?
Right.
Well, guess what? Cash hoard's good for you. Cash hoard means you take a little bit of your salary, your after-tax dollars, and you put it in the cookie jar. And then after a few months, you deposit it in the bank account. Well, if you're a cash taxpayer, they're asking you that question because then if you say no, well, now all of your deposits are taxable because you don't have undeposited money that you're depositing. You don't have a cash hoard. So it's just a simple example of how not understanding what's going on can really get you into trouble with the IRS.
And this also runs counter to the messaging that the IRS is, saying they have, right? Because they're saying we want to treat you fairly. They're saying that, we're not after you, we just want, to be fair and we'll work with you. And this suggests otherwise.
It's still very political. And there are people in the IRS that hate marijuana, always hated it, hated the people that liked it, and want to take a hard line with those folks. There are people in the IRS that don't feel that way, that feel that 280E is unfair and don't want to take a hard line. They're still going to do their job, but they're not going to look for additional ways to hurt you, which some agents will.
And do you think we'll see an equivalent to what we saw on the legal side with the Cole memo, where it's there, but they don't necessarily use any resources to enforce it?
I don't, and
Okay.
and here's why. The 280E audits are amazingly profitable for the cannabis industry. There was a TIGTA report that came out last year on, I believe it was March 30th of 2020, that showed the statistics that are generated in cannabis audits compared to other targeted audits. The IRS has like a secret computer program that mines all tax returns for good audit returns, right? It's called a DIF, a DIF DIF score. If you have a high DIF score, it means that the computer thinks that you would be a good audit. Well, so they compared those DIF score audits to cannabis company audits, and the cannabis audits were 3 to 4 times more profitable for the IRS per hour, had way less no changes, and were just way better low-hanging fruit for the IRS. So I don't see
So they're
them
going to
slowing
continue
down.
to pursue them. Yeah.
If anything, TIGTA, which is the Treasury Inspector General's office, they're the ones that's the group that audits the IRS. They said, hey, IRS, you need to do more of these. And I think we'll see that.
Okay. Well, we very much appreciate your time today. We very much appreciate your insights. We will put the links to the article that you referenced, as well as your organization, in the body. And again, thank you very much. Thank you for sharing that information. And let's hope that it gets legalized soon and this problem goes away.
Thanks, Patrick. Happy 420 to you in Barcelona, I believe.
Thank you.
So have a great day. Thank you.
You too. Thank you very much.
All right.